Hello, everyone. I think everything's working, so we're about to start. So welcome to this week's market outlook. So as usual, I'm broadcasting this via Facebook Live, YouTube, and also the webinar, GoToWebinar software. This is the last one that we're doing using GoToWebinar. So in the future, you can just access this. I think the easiest way of accessing it is if you go to our YouTube page, our YouTube channel, and we'll do it every week from there on in. That way you don't have to register and you still see the same information. Okay, if you're watching the recorded version of this, it was held live. We hold them live every Wednesday at 12:30. So this was held live on Wednesday, the 25th of July at 12:30 in the afternoon. And what it is, it's a 20-25 minute look at the major markets. There's a lot going on this week. I'll just leave that risk warning up for a little bit before we start. We've seen it's a big week for stock markets. We're seeing ongoing earnings season in the US. So earlier this week, we had numbers from Google, Alphabet on Monday night, beating expectations. Then Thursday, the big one on Thursday, we'll take a look at it, is Amazon.com after the bell on Thursday. And we've seen US markets break something of a big level this week. So we'll take a look at those as well. Bitcoin's moving after being fairly boring for a while, for quite a while. Bitcoin started moving. So we'll take a look at that. And also the pound, gold, oil, euro. So all the usual markets. But I think that risk warning has been up long enough for now. So let's get started. Obviously, I'll leave my contact details. I'll normally do this at the end, but obviously to find out more about the company, go to the website, Capital.com. You can open an account, open a demo account, see the markets, play around with it. You can download the app from wherever you get your apps. And if you have any questions after this, just drop me an email, david.jones@Capital.com. And you can follow me on Twitter on @JonesTheMarkets. Right, let's get started. I've got far too many screens open here, but here we go. So what I've done is I've tried to zoom the browser in just to hopefully make things a little bit clearer at your end. So I'm hoping that's a bit more useful and the fonts are a bit clearer. And I thought for a change, we'd do things differently, and we'll start with Bitcoin this time around for a change. It's been an interesting couple of weeks, I think, in Bitcoin, just to remind ourselves, what was going on last year. Unless you've been living under a rock, I'm sure you know about the excitement that we had last year and the first couple of months of this year in the cryptocurrency. So we saw Bitcoin, every man and his dog, it felt, in the last quarter of last year and early this year, wanted to be in Bitcoin. And we saw this cryptocurrency go parabolic from the October lows, November lows, around about $5,500 to $6,000, that sort of area, up to nearly touch $20,000 just before Christmas. And of course, it started 2017 worth only $1,000. So we saw a 19-fold increase from the start of 2017 to the peak for Bitcoin. So a big old move for Bitcoin. Then, of course, this year, again, as we all know, that bubble's burst. We've seen plenty of people, if they were late to the party and didn't think about things like stop losses and have given back or just taken significant losses in Bitcoin. And it's been pretty boring, I think, since February. We sold off in February. Sells off as low as 5.9 in February. Those are the lows. Rallies back up, a big old move, almost doubles, gets up to 12,000 nearly, comes back again. March, April, bubbles around these lows ahead of 6,000. And the similar thing happening since. Let's just jump in on maybe the last few months. Here we go, looking something like this. So again, we saw the price under pressure from the 10,000 area in May, and once again trades as low as sort of 5,700, 6,000 during June. But we've seen this big move over the last couple of weeks now in Bitcoin. It's trading at its best levels for a couple of months. So we're up. What did it reach yesterday? It's a bit quieter today. Traded as high as 8,440 yesterday, so just above 8,400. There's a couple of things behind this move, and last year it felt that every day there was different news coming out about the cryptos. Every piece like news-wise, we're almost obsessed with what's going on in the cryptocurrency world, and the news flow has absolutely died a death this year. But in recent weeks, I think we've had stuff, a couple of bits of news that have helped maybe add to the credibility of cryptocurrency. So first of all, we had the news a couple of weeks ago that BlackRock, the US investment giant, had put together a team looking into the viability of cryptocurrencies as investments. BlackRock do lots of ETFs, exchange traded funds, so that definitely helped lift the price. Then, but that team had been in place for a year, but the news only broke over the last couple of weeks. Then earlier this week, whether it's true or not, rumors are that we may be getting close to having a Bitcoin ETF, exchange traded fund, being approved. Okay, so that's another thing that we've seen lift the price up. So it's all helped, really. We've seen the price rally. What is it now? $2,500, near enough during July. Okay, so we've seen a bit of a move. And I think the problem is, again, it's too easy to get excited, by these sort of moves. I don't think it means that we're going to be seeing 20,000 anytime soon, but it does show how important that area of support has been. All this year, any dips towards 6,000 have ended up being a buying opportunity. I think that's the way to view it now. If we do see the market sell off after this latest surge of news, let's see what happens if it drifts back to those sort of low 6,000s again. In terms of hurdles from where we are now, there's plenty. Let's not beat around the bush here. There's first of all these old highs from up here, 21st of May, ahead of 8,600. Then the highs ahead of 8,900. Then after that, bigger highs ahead of 10,000. So it wouldn't surprise me if after this relatively big move, based on what it's doing recently, we see something of the price tailing off from here. But as I say, let's watch what happens if we drift back to these lows. But it's definitely, woken up, I think, the last couple of weeks, thanks to some more positive news flow driving it higher. Let's have a quick look at Ethereum, then we'll look at more traditional markets. So not quite the same sort of drama in Ethereum. Arguably, well, it has broken out of this downtrend it's been in since May, broke out of it in early July, but it's gone pretty sideways since then. But like Bitcoin, we have definite levels of support we could keep an eye on. Down at the lows from earlier this year, down here around about $350, $400 emerged as recent support as well. So we haven't seen the same dramatic surge, but again, it has stopped falling. So I think the cryptocurrency is getting a bit more interesting. Again, not as interesting as they were in the last 3 months of last year, but quite the move for Bitcoin. Right, let's get back to more traditional markets. We can look at stock markets first of all, because there's a lot going on in US stocks at the moment. We can look at the S&P 500. So we'll have a look at the Dow as well. But I think if you're looking at the state of US markets, the S&P 500 is the broader stock market index. It's 500 shares. The Dow is only 30 shares. So we have a much broader range of markets, of shares as a barometer. What's interesting here is what's happened over the last couple of weeks. Clearly, those Google results, I think, have helped. So much of the market is driven by these so-called FANG stocks: Facebook, Amazon, Netflix, Google. It's just the effect they have on the market is definitely exaggerated, but it is an effect they have. We had this big sell-off in late Jan, early Feb, and then since then, the market's been banging around in this wide consolidation range. The highs we have back here from March, around about 2,800, 2,805. We've broken through them just in, well, I had a look through just over a week ago and pushed out just yesterday the S&P to its best levels since it fell off a cliff back here in early Feb. So we're at 5-month plus highs for the S&P. And it's interesting because, whenever we see breakouts like this, the expectation is, from a charting point of view, if we see a big level break, and it's not just a poke through on one day, the expectation is, well, we could well see the market move higher from here. So the obvious target, if this is going to be a valid break, is a run back to those old all-time highs up around about 2,880 on the S&Ps. And that's why I think this week of earnings is so important. We've got Amazon tomorrow night. is that rare Thursday night after the market shuts. Amazon's results come out. So let's see what happens there. But it's a big break by the S&P over the last couple of days. Even if, we had some disappointment and the market sells off, it'd have to go a long way to change this recovery trend that's been in place since early April. So we're 3 months into this. We've got big support coming in, 2,700, 2,680. And I think it would take weakness below there to change that bigger trend, I think, for US stock markets. So it's all very interesting with this break. If you look on the short-term charts, let's take a look on the hourlies. If you're looking at shorter-term trading of these indices, we got obvious lows from 20th of July through to the 23rd of July, coming in around about 27.95 and then 27.90 from the 17th of July. So even if we saw the market under a little bit of pressure this afternoon and tomorrow, I think it looks interesting if we sell off into this sort of zone. But for me, the interesting one at the moment is that big picture. The fact it's managed to break through these old highs. Let's take a look at the Dow. So the Dow, as I say, much narrower scope. We haven't broken out on the Dow. So the big level on the Dow, 25,800, 25,850 from back here, arguably still trapped within that downtrend. So it's interesting. We've got a bit of a conflict going on at the moment between these two US major stock market indices, but you'd expect if we see the S&P 500 move higher, that eventually the Dow is going to get a move on as well and start playing catch up. If we look at things from maybe an overbought, oversold point of view, if you look at the RSI, it is at levels for the S&P. I've jumped back to the S&P now on the daily chart. It is at levels where this market has run out of steam in the past, hasn't gone overbought since January, but now, whenever we've been up at these extremes, the market has rolled over a bit. So in the short term, let's not be too surprised if it does sell off a bit. But overall, that recovery is still very much intact. So I think for now, at least, it looks from a charting point of view as a buy the dips sort of market. One last quick one on stocks. We'll take a look at Amazon. So Amazon's earnings are out tomorrow night, and absolutely, incredible performance. So this is a daily chart. If we look at Amazon, let's do our Harry hindsight approach to trading. If we look at the end of 2016, so a year and a half ago, the price of Amazon was trading around about $780, $800, and it's currently up at $1,800. So the price has more than doubled in a year and a half. Even for this year, the price is up by about 50%. I think it ended the year last year about 1,200. It's up at 1,800, as I say, at the moment. And we've just got trends all over the place. So I think it's a braver man than me who bets against the Amazon share price at the moment. So we have these earnings tomorrow night. The expectation is that in the last quarter, Amazon have made $2.50 a share. So that's what the market's expecting. When the earnings come out, when the market closed, they do trade in after hours. So you can often see volatility, outside of the 9 o'clock UK time close for the stock market. So that's tomorrow night. But again, lots of support running from 1650, the most recent lows, 25th of June, down to 1550, then big support at 1350. So it's all the 50s. That trend is up. You'd think it would take a massive shock from Amazon for that trend to change. But let's see what happens tomorrow night. Looking at the RSIs again, it's a bit overbought. We went overbought back here. It did roll over for a couple of days. Overbought again up here. It's weakened a little bit over the last few days. You'd expect to see probably fairly quiet trading today and tomorrow ahead of those numbers. See what those numbers look like. Okay, so that's stock markets. Strong. US markets, the ones to watch, I think, because we are in earnings season at the moment. Let's take a look at some of the currency markets. Let's do the euro first because it's boring. So let's get that one out of the way. But it's a big day tomorrow. So tomorrow we have at 12:45 UK time, we have the latest interest rate decision from the European Central Bank. No changes expected to rates. I think the first change isn't expected until the summer of next year for the European Central Bank. And then from 1:30 we have the press conference, and it's often the press conference from 1:30 onwards where we can see the volatility for these markets. So let's see what happens tomorrow. But you can see look at it. It's just trapped. It's been trapped in this range now for more than 2 months. So on the upside, 118.50 stops any rallies. On the downside, this 115 area, 115 to 115.50 has proved to be really important for euro dollar. And at the moment, with it trading just below 117, we're pretty much in the middle. We're in the middle of the range. Will we have something drastic tomorrow that causes us to break out? Who knows? But at the moment, it's pretty boring, but trapped in that sideways range. But let's see what happens 12:45 tomorrow when we have the latest interest rate decision from the European Central Bank. Let's take a look at the pound, which is a lot more interesting than the euro at the moment. So pound US dollar. Let's just zoom in a bit. So last week we saw the pound. I think we've been talking about this 130 level for a while now. So last October, when things were more positive, when the market outlook was more positive, it sort of sold off to 130, rallies, comes back to it again. 2nd of November, rallies, and away it goes. So 130 up to 143. So 130 has been really important support for the pound. Last year it's where the market saw a lot of value for pound US dollar, and we're here. It has actually poked through. So on the 19th of July, it did trade as low briefly as 129.57. Let me just show that on an hourly chart so we can see it dips below 130. It does spend a few hours there, but has recovered since then. And I think what's interesting, if it's going to turn around anywhere, then this is the place. I think that's really the bottom line for pound US dollar. But we have some disappointing UK data. I think high street retail sales was poor. Expectations are for the Bank of England to raise interest rates in August, but some have started doubting that. I still think it'll happen because they were expected to raise rates in May and they didn't. I can't see them disappointing expectations again, but let's see. So that's next month. So we have seen the market turn around a bit, but we are still very much trapped, in this downtrend. Yeah, so whilst I think, well, from my point of view, chances are we could get something of a half decent rally. I don't think there's a hurry yet, because whenever we've seen moves up to this downtrend that's been going for more than 2 months now, it's slammed into the downtrend, turned around, sold off, and made fresh lows. So let's see what happens. But I think the obvious level to watch, 133. So the moment the market is trading at about 130, 160. So we're 140 points below that level. Let's see what happens. I think adding weight to the argument that maybe we're due something of a recovery here is what's going on with the RSI. I've talked about this in the past. So I think the problem with things like RSIs, they will give you a signal like back here where it's oversold to go against the trend far too quickly. If a market is really moving in one direction, who cares what the RSI is doing? It's not irrelevant, but it's not important. But when we see this sort of thing happening, where the RSI makes a low, pushes to a lower low, and the RSI makes higher lows, this is known as bullish divergence. So it can be a suggestion that maybe the weakness is running out of steam. But as I say, we still have this downtrend in place. Let's see what happens. And the problem is we just keep getting surprises from around Brexit, people resigning from the government that don't really help sentiment towards the pound. But I think the statement yesterday by Theresa May that she's going to be leading the Brexit negotiations has so far been well received by the market. But I think 133 is a big one to watch because it's this trend. Let's just flip it over to an hourly chart just to see if you can see that a little bit clearer, that downtrend that's been in place. There we go, since May. And that's where we're coming in. So plenty to watch, I think, pound US dollar this week. So euro a bit boring, but European Central Bank tomorrow. Pound US dollar, a lot more interesting. It's had a look through 130. Is 130 going to end up being the turning point? Let's wait and see, but it needs to crack this 133 downtrend. And then finally, let's look at gold and oil. I think these are both interesting markets at the moment. Let's start off with oil, and we'll take a look at gold after. I think gold could be another one of these ones that maybe we're seeing a turnaround. But here's the price of oil. So since last summer, oil was $42 a barrel, and it's traded briefly as high as 73, above 73. We had the sell-off. We had the sell-off down into 67. But, as I always say, when we have clear trends like this, like the Amazon trend, for example, if the market sells off, it should be technically just viewed as a buying opportunity. If we're going to have like a textbook charting approach to these markets, then the sell-offs are just buying opportunities. And so far, that has been the case again on oil. We've sold off, we dipped just over a week ago as low as 66.20 a barrel. It bounced back, currently trading just above 68. So if this trend is going to continue, the next obvious target is a run back up to these highs above 73. So I think, if we're trading it, the big levels to watch, the most recent lows at 66.20, I think this is still the absolute massive support for the price of oil ahead of 63. So I think only if it breaks 63 does it start to look as if this trend is in trouble. So for now, I think the bias is definitely still up. I don't think it didn't quite go oversold down here. You can see it hasn't been oversold. Hasn't been oversold actually at all on a 14-day RSI in this trend. We've got to go all the way back to June of last year to see the last time it was truly oversold. It got pretty close recently, but for now that trend is still up. So I'd have to say medium term, the target would be for a run back up above 73, and it's only if 63 breaks does it start to look as if that trend is in trouble. And then this afternoon, every Wednesday, we have the oil inventories. So these are announced Wednesday afternoon, and it's basically how much oil is stockpiled in the US. So that's due out today. So we could see some volatility for the price of oil a bit later on. And finally, gold. I think this is an interesting one from a very long-term point of view. The price of gold has slipped back quite heavily in recent months. So from April this year, when it was $1,350, it's been almost as low as $1,200. So we've seen, what's that? We've seen more than a 10% slide in the price of gold over the last 3 months or so. But it's come back to a level that, again, has proved to be an important one in the past. These old lows around about 1,200. So the lows from March 2017, 1195. The lows from last summer, almost a year ago, well, just over a year ago, at 1207. And we've seen the price hold. But again, I think it's one of these things, if it's going to turn around anywhere, a bit like the pound, then this is the place we'd expect it to happen. But it's another one where I don't think there's any particular hurry. We've seen it with trade as low last week. How low did it get last week? It got as low as 1211 last week, and it's currently trading at 1232. So we've seen a half decent bounce, but we still have this big downtrend in place. We do have, as with the pound, a bit of this bullish divergence going on, where the RSI slipped to a low, market slips lower, but the RSI doesn't do that. So I think 1200 is a big level to watch for gold. It sold off again yesterday, got as low as 1218 and has bounced back. But I think we do need to break out this trend, which is a long way away at the moment. It's about 1265-ish, 1265, 1270 on the trend. But I think it's an interesting one to watch to see if we see, first of all, gold start to build a base down here, and then maybe after a few weeks, a few months, whatever, finally that trend gets broken and we can start looking at recovery. I think if it breaks 1200, 1190, 1200, you'd expect even more selling and even bigger drop. So that's really the big level, I think, to look out for. But it is interesting down at these levels. Let's just take a quick look on the hourly charts, on the short-term charts. Here we go. So that was the move sort of back towards 1200. We've seen quite a sharp turnaround off that, and at the moment it's sort of gunning for these highs from a little bit earlier in the week, from Monday of this week at 1235. If we break 1235, then we'd expect to see a move back into sort of mid-July levels around about 1250. So the hourly chart is interesting, but I think, again, for a lot of us, it's probably the daily chart that's the one to watch to see if we do see some sort of a base built here. So we'll start wrapping things up here, but just to summarize, Bitcoin is interesting because it's had a move, but it wouldn't surprise me to see it drift off the next few days. Let's see what happens if it drifts back towards the low 6,000s. US stock markets are very much in focus because it is earnings season. Amazon's earnings tomorrow night, but this move by the S&P above 2,800 is a pretty big break. So let's see if it can hang on to that. Euro has been boring, but tomorrow we have the interest rate decision, and pound, US dollar. Are we going to see it try and build some sort of a base down here at 130? Exactly the same sort of area we saw it in the last quarter of last year. So plenty to watch out for. So the immediate one, European Central Bank tomorrow, and then Amazon results after the closing bell on Thursday night. So lots going on the next 24 hours. So we'll wrap things up there. As usual, we'll do it all again next Wednesday. But to find out more about the company, open a demo account, open a real account, go to Capital.com. Any questions after this, feel free to drop me an email, david.jones@Capital.com. And you can follow me on Twitter for stuff. And I'm at Jones the Markets on Twitter. But we'll finish things there. Do it all again next Wednesday. Thanks for coming along and enjoy the rest of your day.